Welcome to the Sykes Bottom Line Pharmacy Podcast, your regular dose of pharmacy CPA advice to fuel your bottom line, featuring pharmacists, key vendors, and other innovators.
Check. Your checks. Yes.
Hello, everybody. Welcome back to the Sykes Bottom Line Pharmacy Podcast. And today, let me get my mic right. Today, we're talking about our favorite subject now. Bonnie's favorite, the employee retention tax credit. So,
is this take continues, third episode on this?
Yeah, this is probably our 10th video on this since the CARES Act was passed. But it's continuing to gain momentum out there. There are a lot of third-party vendors out there pushing this credit. So I think our point here is we want to inform the listener out there on what they need to be thinking about before they jump into the ERTC for their pharmacy. To recap, there is 3 ways to qualify. You can have a drop in gross receipts, which we've covered in other videos. If you meet that drop in gross receipts, you absolutely should go for the employee retention tax credit.
Yeah, that's a clear-cut point.
Clear cut, black and white. My gross receipts dropped 50% in 2020, or the 20% drop in 2021. Again, see our other videos on that. But if you meet that, no brainer, you go for it. Second item, where you can qualify as a full shutdown. Pharmacies were not fully shut down, so that's out. The third item, which is where a lot of these vendors are pushing, is the partial shutdown due to a government order. It's not as easy as just saying my supply issue was there. I had to telework a couple people. I had to social distance. You got to get a lot more into it. So we're kind of going to break down into what this partial shutdown means. Before we get into that, I do want to show my screen.
For those watching on YouTube.
And the IRS released this in October of 19th. It's the employers warned to beware of third parties promoting improper employee retention credit claims. So the IRS is on the fact that there's vendors out there that are promoting this credit, maybe that aren't following the rules and not doing what they're supposed to be doing. They're just blanketly throwing out that you qualify, let me get you the money, pay me the 20%, and I'm out. And when you potentially get audited down the road, they're not going to be there to help you out. So be aware of that IRS notice there, news release, because the IRS is this is on their mind with these third party.
Scotty, just to kind of, I just wanted to, in a positive note, in some instances, there are some pharmacies who do qualify, and not only that, here at Sykes and Company, we've actually prepared and processed the ERC tax credit. Clients have received the funds. I personally have prepared some for some pharmacies who did qualify in certain circumstances. Just to kind of briefly explain the circumstances, one pharmacy we had was kind of really closely related to a medical practice, and the medical practice, for all intents and purposes, shut down during COVID for an extensive period of time, saw very few patients, and the pharmacy was impacted. It had a large reduction in gross receipts. So we ran the numbers and we saw the reduction. And at that time, we were running the numbers for all our clients. We didn't necessarily call the clients and tell them, hey, we ran your numbers and you didn't qualify. But we went and ran the numbers for all the clients. So we were able to inform them, hey, you qualify. Yep. And another example is a pharmacy who had a restaurant. And there was a big reduction in the wages because almost half of their employees' time was spent in the restaurant, even though it wasn't a big portion of their revenue. So in that instance, because of that the restaurant being closed and them having employees there, we looked at that, and we're going to kind of get into the nuances of the rules a little bit more shortly, but they qualified. So I guess for those who are Sykes and Company clients, I just want you to rest assured that we're looking at the numbers on a client by client basis proactively, and we have been from the beginning to see if those areas that you would definitely qualify for that can be quantifiable are items that whether you qualify or not.
But to be clear, for a large majority of our pharmacy clients, there was not a drop in revenue during COVID. COVID was good for business for pharmacies during that period of time. I think you guys would agree on a majority level. But some of those specialty situations, like you just mentioned, you're absolutely right, Kendell. We're definitely looking at it. But, I get it. I mean, our clients are calling. I'm getting calls and emails all the time because you guys are being, you're getting calls, you're getting emails constantly from these third-party vendors telling you qualify. And so I get that people have questions. And so that's what we're kind of trying to do is just clear this up, tell you what we see and how we think it relates to pharmacy so that you can make a decision about how you want to move forward.
Yeah, I think the restaurant example is a great example of a pharmacy being able to get in with a partial shutdown or a snack bar, soda shop. If you can meet the requirements of that portion of your business being a more than nominal portion of your overall business, nominal in terms of the ERC is 10%. So you need to be able to quantifiably show the 10% that will push you into qualifying for the ERC. In terms of the restaurant or the snack bar, the 10% can be wages and hours of of service for your employees in that department, or it could be revenue, if I'm not mistaken.
Yes.
So understand that word nominal is a crucial piece to the puzzle if you are going to go with the partial shutdown. So the IRS would say, or the regulations, and the regulation that really highlights all of this, and it's very straightforward to read, it's not very technical, is IRS Notice 2021-20. If you're going to go with the partial shutdown qualifier for your pharmacy, I would encourage you to read IRS Notice 2021-20. There's a bunch of Q&A in there, and a lot of that is applicable to pharmacies that you can apply to your scenario. So we have seen a lot of these third-party reports on the partial shutdown for pharmacies. We've got clients who've sent them to us to overview. And most of them center around social distancing, supplier issues, teleworking maybe for a couple of their employees. All good and great. But you better have in your documentation how that is more than nominal. In other words, you'd be able to quantifiably show how that social distancing or the supplier issue, the teleworking is pretty much out. There's a 4-point test for teleworking. We're a CPA firm. We didn't even qualify under the teleworking, and we have 45 people that had to telework. So there's a big hurdle with the teleworking to get that to qualify. So you just need to read these regulations. And a couple questions in particular on Notice 2021-20 that are applicable to pharmacies is question 12, which talks about the suppliers. If you have a supply issue that you're going to claim as a partial shutdown, well, then you need to be able to say, all right, I had that supply issue. It had a more than nominal effect on my business. And you need to quantifiably show how is the 10% nominal effect. That's going to be a bulletproof support, hopefully, if you were to get questioned here. Question 13 talks about the lack of demand because other areas had to be shut down. But going back to question 12 first, though, the supplier, because you couldn't get the drugs, had to have also been under a government order that caused them to have the supply issue. So not only do you have to quantifiably, and this is in the regulations, not only do you have to quantifiably show that you had more than a nominal impact here because of the supply issue, you also need to be able to explain what the supplier restrictions were on their side. Be mindful of that. So OSHA, there's some talk that the OSHA requirements is a qualifier. The IRS has said OSHA is not a government entity or a government order, if you will. So that kind of kicks that argument out. So as you can see, this is an extremely complex area.
And highly
it's
subjective.
Not a it is subjective. It's extremely complex. So, but as you can see, this is not just a blanket thing. This is not a universal thing. It was never intended to be a universal credit for everybody. Again, if you qualify and you meet these requirements, by all means, you should go for it. But we just want to make sure you're doing the due diligence out there to be careful here, because aggressive positions here could get you could get some trouble down the road. The IRS has extended the audit statute of limitations for ERC claims.
I think
Normally
that's a big
3
thing.
years.
That's a big light bulb, right?
Thing.
I mean, it should be obvious to people if they're extending the extension limit of time.
Right.
That they're
so
planning.
It's going from 3 years to 5 years.
Yeah.
So there'll be plenty of time to audit these things. Penalties and interest if you had to pay it back. And another thing that I don't think a lot of people have thought about, if you get the credit, you have to pay tax on the credit. You have to amend your tax return for the year you're pulling the credit from. So if you have to amend 2020 or 2021, that's the year you're getting the credit, to report it as taxable at that time. And then 4 years later, you get audited. The IRS says, well, you didn't do the due diligence, or you don't qualify, you can't support it. Not only will you have to pay back the credit amount, potentially penalties and interest, but you may be out for the tax you had to pay on the credit amount, because 4 years from now, you'll be on the statute of limitations for amending, again, that 2020 or 21 tax return,
right,
to take out the credit. So you would have paid tax on the credit and you wouldn't have gotten the credit because the IRS would have said no go. So you got to think about that as well. There's also one more question I want to talk about, and that's question 13. And I'm highlighting areas that I've actually seen on some partial shutdown documents from other vendors. And question 13 says, if a stay-at-home order caused your customers to stay at home, and as a result, it reduces in demand for your products and services, it doesn't necessarily mean you qualify. It has to be that direct order on your business that's causing the issue, not a direct order on somebody else that impacts your demand. Now, if you qualify because of the gross receipts, as Kendell mentioned above, you're in. But if you don't meet the gross receipts qualifier and you're just saying I had less demand, be careful with that. Question 13 on Notice 2021-20 should be checked into. With all of this, and I'll shut up.
he's heating up right now. Scotty's on a roll.
With all of this, any partial shutdown order that you're going to claim as being your partial shutdown, again, you have to show you need to be explain a nominal impact to your business and a quantifiable number is going to be a great support. Furthermore, you're only eligible for the credit for the period that you were partially shut down.
Mm-hmm.
So, if you're going to just say, throw a blanket, this government order was in effect on March 27th through, March of 2021, March 3rd of 2021, whatever. During that whole time, we were partially shut down. That's kind of a flag because, this impacts only the time. The partial shutdown will only be eligible for the ERTC for the period of time you were actually partially shut down. So if you had that supplier issue and it was a valid issue, a nominal impact to your pharmacy, you can show that the supplier had some restriction going on there. That supply issue would only be partially shut down during the period it actually occurred there.
Yeah, and on that point, some clients that I was looking at, you look at the government order that impacted their pharmacy. Some of them did initially, some counties, it was sometimes on the county and city level. So we did some research on that, and the order might have only been for a week that impacted the pharmacy. But then they said, well, we continue to close the doors because of safety measures for our staff. Well, at that point, it's no longer a government order. So the eligibility would have been for a week.
And then you have to do the calculations for that week.
Yeah, because if you remember, there were phases of businesses. Different business types kind of they allowed the doors to be opened or a certain number of people, and then restaurants, and then this. So everybody, if you remember, they were looking on their county's website or the city's website to figure out whether their business could open their doors again.
Right.
And the pharmacies were, generally speaking, if there was an order, it wasn't several months.
Right.
And they list too that if there's an order to say there's a certain amount of people or the social distancing, and you have enough space to still service your clients or your customers, your patients, even though maybe someone might wait a few minutes, then that's not a partial shutdown or anything of that nature, because you have enough space even within social distance.
And you got to show the nominal impact.
Yeah.
And I've read that you really have to show that you had to turn away people.
You have to show the nominal impact. So if you can only let 3 people in your store and you used to be able to let 10 in there, you got to show how that had a nominal impact. If you cannot show that and you get audited, you might be, you're not going to meet the requirements for the credit. So there's probably a lot of pharmacies that do qualify for maybe a period of time. And the period of time is probably not very long. Right. And if you did qualify, it was probably right at the beginning of the pandemic. So when you think about it, most pharmacies out there got PPP. You cannot double dip with PPP wages. So if your pharmacy, let's just say you were partially shut down and you're able to pull a month, say April and May of 2020. Well, if you had PPP during that time and you claimed those April and May wages for PPP,
you've already used it. Yeah,
you're out. You're out for the RC. So if you do qualify under one of these, you need to consider whether it's even worth it, because it may end up calculating out and it's not worth it. So all in all, that the due diligence is going to be very important. Showing the third parties why you qualify, what orders they were, how it had a nominal effect on you. Quantifiably would be the best way to show a nominal effect. The IRS puts 10% in the regulations. And again, read through that notice, 2021-20. It has a lot of great information in there.
It's an easy read.
It is an easy read. It's 100 pages, but it's very good. And it actually on page 100,
double spaced.
It is double spaced. On page 100, it does have the substantiation requirement. So it's telling you, showing you what records you need to be able to maintain. You need to have the government order that's applied to you. Any records you have that are showing the nominal portion that was suspended, so you're being able to quantify the nominal impact to you, and so forth. So there's a lot of good information in there as well. That's going to be, I think, if you're a pharmacy owner out there and you're wondering how you qualify, if you qualify, notice 2021 is going to give you a lot of insight.
Yeah, and I can imagine that everyone pushing these ERCs, and I can imagine not everybody's malicious, but if they go to a strip mall and it's like a clothing store, reduction in gross receipts, restaurant closed, they close their doors, and then they knock on your pharmacy. They're just thinking, 90% of everyone I talk to qualified, so you're bound to qualify. But, they're not looking at it from a specific pharmacy, because while those other companies were losing tons of money and their employees couldn't work, the pharmacies were looking for more people to work, because a lot of times people were still flooding in to get their prescriptions, and revenues were increasing. So I think the pharmacy is just in a different ball game than the average American business. And the impact was completely different. So I could see how people knocking on your door would just assume you qualify, but just, ask them for documentation on how you qualify. And then you read through it yourself and think, does this actually match what happened to me? Even if you didn't look at the regulations, if you look at what
my biggest thing, Kendell, is, I keep hearing, well, the third party has told me that I qualify. They've looked at my stuff and they told me I qualify. Well, I think that's the biggest takeaway is you need, like Scotty said, read through this stuff yourself, ask them what it is that they're using to tell you. I mean, what are the qualifications they're using to say that how do you qualify? And you need to make sure that you're on board with that and that it makes sense to you, because at the end of the day, they're not signing it. You are. You're attesting to the information on that information. So, and in a couple years, if you get audited, they're not going to the third party; they're going to go to you. So,
if your risk appetite is to heck with it, they're telling me I qualify, then go. That's all you. That's your decision to make. But just be aware of the kind of the due diligence that and the complexity behind this credit, based on just, hey, you qualify.
Yeah.
So let's see. I'm looking at a third-party report here. Sanitation of existing offices. If I don't see any nominal, there's no nominal support explaining the nominal impact with this report. So sanitation was one of them. Supply chain was one of them. Virtual equipment, teleworking was one of them. There's a 4-part test for that virtual teleworking thing. Be careful of that in 2021-20. Doctors' offices were closed or reduced their hours. That decreased prescription volume, but it was not more than nominal. So, just looking at the regulations, you could kind of have a field day with this one here. But, the reason why this is so popular, why this is such a big topic right now, is all the COVID relief programs have gone out, are pretty much gone now, except this one. And again, like Kendell, you were saying, we've been looking at this since it passed the CARES Act. I mean, I've been studying this one for 2 years now. This is not new to us.
Right.
But the reason why it's popping up is because most COVID relief programs are done now. And you've got these third-party vendors, pop-up shops. There's no regulations to these pop-up shops. They can do whatever they want. They are in it for their 25% credit claim. They're not looking out for your best interests necessarily. Most of them are not. There's a few of them out there that are maybe doing what they need to be doing. So just that's why you're seeing a lot of this. And then so you see pharmacies say, yeah, well, I got it. I mean, be aware, this is what's happening behind the background. But again, with all that being said, if you are an aggressive risk tolerance kind of guy or girl, go, that's your call. But we wanted to be sure that we explain the due diligence, the complexity of what pharmacies are facing here. And if you did have that restaurant or snack shop, or you do have a nominal impact and you can show that, let us know, and we'll be happy to help if you're a client of ours, if we haven't already talked about it. So I think with all of that said, Bonnie and Kendell, I think we can put this one hopefully to rest for right now.
This is the end of the trilogy of podcasts on the ERC. Is this the last of 3?
Oh.
And if you email us and say, hey, can we get the credit? I'm going to push this video out to you. But
there might be a prequel.
I don't think we're going to be talking about this credit anymore. Knock on wood.
Oh.
But if we do, we will cover it. If there's any new developments, we will cover it. If there's any new developments, we will cover it. And believe me, nobody was looking at these regulations more closer than I was trying to get pharmacies into this.
I was just about to say that. Scotty has been looking at this from day one, just trying to find a way that pharmacies would fit in this model.
Looking
any
for
little small area. Yeah.
So
not trying to be negative, just trying to be real about what we see.
Yep. So hopefully that helps everyone out there. And if you have any questions, feel free to reach us. Let's see. Bottom line. I think the bottom line is do your due diligence. If you're being approached about qualifying for the ERTC, do your due diligence. Look at notice 2021-20, and just do your due diligence.
My bottom line would really be the same, but just don't just take what a third party tells you. You've got to do your own homework, your own research, and make sure that you're comfortable, because at the end of the day, you're signing it.
Yeah, and I just think the pharmacies, the pandemic impact them a lot differently than the most of American businesses. Yeah. So the ERC was great for the American business, and especially those who were really hurting during that time. So if you're a pharmacist, just say, read through it, and does this actually apply to me?
Yep. That's all you can do.
All right. Thanks, everybody, for listening. Until next time, if you got any ERTC questions, shoot them our way. Ask Sykes at sykes-cpa.com. Thank you.
Stress, go online and request from the best. We the best, Sykes and Company. We the best, Sykes and Company.
So I want to be clear, during the podcast, we talk about a nominal effect when it comes to a partial shutdown. And what I mean by that, and I want to be very clear here, is that you want to show and be able to show a more than nominal effect. When I say nominal effect, I'm referencing more than a nominal effect that you're going to want to show, prove, quantify, etc. And again, in the IRS regulations, it's 10%. So wanted to be clear there for your listening. Thank you.